Woolworths at $27.06 is higher by 0.5%.
OK, let's go to Chris Weston, IG Markets for you in Melbourne. Chris, after an hour on this session now, we're still kind of grappling with the same old same, are we not, with the offshore influences? What's really changed?
Nothing.
Yeah.
No, I mean, we're down for a fifth day here in Australia. I mean, that's clearly what we're seeing at the moment. Nothing's changed really. I mean, we haven't learnt anything new from Europe. I mean, Europe, if you look at the actual equity markets there, they had a good day. I mean, it was very much down to the fact that Spanish yields, Italian yields came off quite sharply. Good to see that we've got a little bit more colour on the first tranche of what's going to be obviously a bigger bailout package to Spain, 30 billion of which Spanish banks will be lent EFSF bonds, which they can exchange for cash as and when they need it. But there's still a lot of clarity. There's still a lot of clarity we need. I mean, the whole sort of bailout mechanism is not actually going to be debated until September. There's a lot of stuff about, you know, the Cyprus loan, which was supposed to be a done deal. That's not going to be fully debated, and we're not going to get much about that until September either. And you know, the Germans were trying to ratify this ESM, their actual participation in the European Stability Mechanism, and their role in the fiscal compact. And we had a load of minority parties recently just saying that this is unconstitutional. That was debated in the Constitutional Court last night. That was expected to be passed and signed off by the President at the back end of this month. Now we're hearing Der Spiegel saying that could take up to 3 months before we even know if Germany's going to take part in this ESM and fiscal compact. So clarity is not the name of the game at the moment, and of course the euro got smashed on the back of that. It's at record lows against the Kiwi, the Swedish krona against the Aussie. We know that.
Well, yeah, let's just clarify as well if we can, because we can gloss over that, but it's vital, is it not? Because if Germany can't participate, and now Mario Monti from Italy saying they have to dip potentially into that pot of gold if things get worse for that economy, who's actually contributing, pray tell? Who can afford to put into it, let alone take out of it?
Well, in my mind, it was Germany's idea. Germany and along with Sarkozy's idea. Sarkozy's out of the mix now. Mr. Hollande would probably like to rip it up if he could. And you know, part of his whole policy was, his whole campaign was based on growth initiatives. So I think he would like to get rid of the fiscal compact if he could.
Chris, Germany's all right. Jury's out. I guess you can best sum it up as that one. I'm going to just hurry you along on this one. A call overnight on the euro falling to 1.15 against the greenback in 6 months. Where goes the Aussie in the wake of that trend, if it's true?
Well, it's a very hard one to answer. Why? Why is it a hard one to answer? Because the world would look like probably a very dark place if we get down there. That would then raise the chance of QE3, which is still teetering on the edge of whether we get it. Then that will be good for the Australian dollar. We may see the euro really differentiate itself from other risk assets in that regard. It's apparent that the QE package, if we were to get another one, would have to be massive. It would have to be huge. We've got yields already at all-time lows as well. So you may have this kind of differentiate if that was going to be the case. So
is the yield play that still attractive though? Because of course the RBA is still on an easing bias as well. So you're whittling down and ever decreasing. You know, the virtuous circle's becoming less virtuous.
Well, I think I'd say we've got a mild easing at best. I'd probably say more a neutral stance by the RBA personally. But you know, you look at Philip Lowe's comments today, they're willing to cut the rate if it comes down. I mean, his statement in the entirety suggests the RBA aren't looking to cut anytime soon. And perhaps the 90 basis points of cuts which are priced in the OIS market is probably a little bit optimistic. But I think also what you've got to do in this situation, if the euro is going down to 1.15, clearly German bonds are going to be associated with this. How much money is going to have to be tied up in this? And again, it just feeds into the idea that the Australian Treasury market is a very, very attractive place. With $4 trillion worth of safe haven or AAA rated securities, it is the main driver of the Australian dollar. Why is the Australian dollar outperforming against the crosses? Why is it outperforming and holding up quite nicely at this 102 level? It's because there's foreign demand into Australian treasuries at the moment. We've got a bond auction coming out at 11 o'clock. It should have just been announced. 1 billion Australian dollars of 12-year bonds. It'd be very interesting to see the foreign demand coming through there. I would imagine it would be very, very high indeed. And that's what's keeping the Aussie supported at these levels. Do I think the Australian dollar deserves to be lower? Yeah, I do. I think it's probably the terms of trade and everything else probably deserves it to be around, below parity at the moment. And, I suggested yesterday on the show that perhaps you look to fade the Australian dollar at 102.40, got up to 102.45, and it's back a little bit below there right now. But, yeah, I'd say on a pure growth metric, on what we're seeing at the moment in Europe, the euro deserves to be lower. And I think probably the bigger point from taking a step back and let's look at the whole picture, the key point about this whole situation is we're having rate cuts, we're having stimulus thrown at the whole situation globally in all parts of the world. A year and a half ago, 2 years ago, we would have seen monster rallies, 5 or 6, maybe 7, maybe up to 10% rallies. These rallies now last one day at best, and it's just showing that the rate cuts and stimulus are just not helping the situation.
We are altogether punch drunk. Have a very good one. Thank you, Chris.
Cheers.
One of